Hi everyone, in this episode, let's go through the 5 reasons why you shouldn't buy commercial property right now, whether you're listening to this in 2025 or 2026. By the way, my son's at soccer practice. I'm in the car waiting for him to finish. It was kind of cold outside and I've managed to jam my phone in the steering wheel so I don't have to hold it. So I thought, let me do a video this way. Apologies if the resolution isn't great. Also, I'm going to be doing a lot of thinking, so maybe make sure you're listening to it on 1.5 speed or 2 speed if you get bored. But this is going to be really important information that could save you from buying a really terrible commercial property, and even more so, it might save you from buying commercial property full stop and pivoting from residential to commercial only to regret it. Now, I know that you see a lot of content from buyer's agents. There's basically 2 big commercial buyer's agents. I don't want to name them because they'll probably come after me litigiously. But because of all the content they produce, a lot of property investors, especially those who consume a lot of content, podcasts, are in the Facebook groups, YouTube channels, they think commercial property is what they should be buying because they've built a small residential portfolio, maybe 1, 2, 3, 4, 5 properties. It's not spitting out that much cash flow because they've probably still pretty early in their portfolio acquisition process. Maybe you're just 1, 2, 3, 4, 5 years into it and you're like, why haven't I retired yet? Of course, that is not how property works. It takes 10 to 20 years to actually retire from property, but nonetheless, you might be getting impatient. And then there's this ad by a commercial buyer's agent who, by the way, has like tens of millions of dollars of property, commercial property that is, and they'll tell you they pivoted from residential and commercial and now they're living the high life, without telling you that actually they made their riches from the buyer's agency income itself. But that aside, and you're thinking, yeah, like I'm not generating that much free cash flow. In other words, net passive income. I've got a lot of equity in my residential. Why not pivot also to commercial and, get these amazing yields? I only need 1 or 2 commercial properties, I can retire. Let's break it down. So the first thing is that realistically, a solid low to medium risk commercial property in 2025, 2026 is going to give you a yield of around 5 to 6%. Now, I know a lot of adverts, etc. will say, oh, you can still get 8%, 9%, 10%, and you can. But they will be in much smaller regional towns. And by the way, regional commercial property doesn't work in the same way as regional residential property does. Regional residential property can still boom. In fact, regional residential property, in the major regions at least, has performed just as well as Sydney. But commercial, not the case. And also, banks know this. They're not stupid. Therefore, banks will ask you to put down a bigger deposit if you're buying a regional commercial property. But I went on a tangent on regional. Let's just bring it back. Low to medium risk commercial property with a pretty good tenant, with a pretty good, lease period remaining is going to yield you about 5 to 6%. So let's consider that. I know it's net, and I know a lot of the argument for commercial property is that it's net, and unlike residential where it's gross. And so you're thinking, hey, if I put down $1 million in a commercial property, it's going to be making me $50,000 to $60,000 net. That sounds really appealing, and don't get me wrong, I've done that in the past as well. I have commercial property, so I'm talking to you objectively, impartially, having done both and made a lot of money off both. But right now that we are post the interest rate reduction cycle that we experienced, the huge interest rate reduction cycle of COVID, that is really when commercial property boomed. It is no longer booming. And so if you're getting a 5 to 6% yield, okay, that might seem really good, but get this, that yield, compare it to a term deposit or just your savings in the bank, let's say at CBA, you're getting like 4.5%, maybe even 5%, basically no risk in the bank. Now, I'm not saying keep your money in the bank, right? But I'm saying, do you really want to take such a huge risk of buying a commercial property for just a 0.5 or 1% interest rate spread? Like, is the risk commensurate with the return that you're going to get, the incremental return? I would say no. And the reason I'd say no is number two. Number two is that yield is not actually net. I know a lot of these commercial buyers agencies will say, yeah, it's net. Actually, for properties, especially sub $3 million price range, that net yield, even though it's advertised as net, is not going to be net of land tax, is not going to be net of property management fees, is not often also going to be net of insurance costs and maintenance costs. Now they'll say, hey, it's up to the tenant to upkeep, make good that commercial property. But what they don't tell you is that there are certain parts of the commercial property that the tenant has no responsibility over. For example, the roof. For example, drainage. There's so many things I could go into. Now think about it. The roof is probably one of the most expensive things to rectify, repair, or replace, and the tenant has no responsibility over that. Same with drainage, same with so many other things. So the maintenance is a real thing in commercial property, regardless of this make good clause in lease contracts that say when a tenant leaves, they have to leave it as they found it. Yeah, but if something happens to the roof, or something happens to the drywall, or something happens to the plumbing, or something happens, behind the scenes, that's all your responsibility. The other cost that isn't going to be net for this price range is property management fees. The thing is, when you get a new tenant, in residential, you probably have to pay the property manager an additional week's worth of rent just to basically say thank you, for getting a new tenant. Of course, the advertising fees as well. In commercial, there's the advertising fees, but you actually have to give something like 15%, sometimes 20% of the first year's rent to the leasing agent. Sometimes it's not just the first year's rent, it's more than that. And so it's like, okay, like that sounds a lot of money. That sounds like a lot of money. All of a sudden that 5 to 6% yield is significantly dropped, okay? The other thing is vacancy. If you hold a commercial property for 3 to 5 years, there will invariably be about 6 to 12 months of vacancy in that time. I know a lot of you might be listening and watching to this, and just like me, you might say, oh, I haven't experienced that, PK. And that's true, but I'm not the average. You're not the average, okay? You may not have bought the top cream of commercial properties. And by the way, the amount of demand there is to these commercial buyers agents, they're not buying you the cream of these commercial investments either, because there simply aren't enough. It's not a very liquid market like residential. So if there's 1,000 investors that want to buy 1,000 commercial investment properties in a month, which by the way there's not that many available that are decent. So you end up buying something trash. You end up finding a tenant that can't pay, and therefore there's a huge vacancy. So can you realistically survive a vacancy of 6 to 12 months every 3 to 5 years? You got to ask yourself the question, and on a net basis, you got to take that away from that 5 to 6% supposed net yield to find the true yield inclusive of vacancy. There's so many other things, but let's go on to number 3. Commercial property does not grow as fast as residential property. Now consider this. I know that in the last 5 years, because of COVID and massive monetary stimulus and massive interest rate drops, commercial yields have compressed. In other words, before you could get a commercial property with a yield of 8, maybe 9%, medium risk. Now that same one is down to 5%. So a lot of these people who built their commercial portfolios that are trying to get you to use their services to buy a commercial property, they've bought when times were better and interest rates dropped, therefore commercial property went up. There is a direct correlation between interest rates dropping and commercial valuations increasing, because yields compress. The lower the interest rate, the lower the yield, and the price or the valuation of a commercial property is inversely proportional to the yield. So the lower the yield, the higher the price. So that's what happens. Interest rates drop, commercial real estate valuations rise. Now, are we realistically expecting interest rates to halve from this point onwards? Like they're in the high 3s right now. Do you really expect them to go down to 1 or 1.5? if you do, then maybe it's a good time to buy commercial real estate. But if you think that, yeah, maybe we'll get 1 or 2 more interest rate cuts in the next 6 months and then it will flatten out. Therefore, if that's your thesis, don't expect commercial real estate to go up in value anytime soon. That is the reality. So you're then just relying on this supposed 5 to 6% yield, net yield, that actually on a true net basis, after property management costs, after vacancy, after insurance, after maintenance, actually goes down to more like 3%. Okay? And I know sometimes they will compare the cash flow outcome of commercial real estate to residential real estate and say it's much better, but that's because they've incorporated the fact that in commercial, often you need to put down a 30% plus deposit. So naturally, the more deposit you put down, the less loan proportion you have. And because you have less loan proportion, naturally your cash flow outcome will be better. But that's not an apples to apples with residential. If you put a 30-40% deposit on a residential property, that too will become positive cash flow. So you see how they manipulate things? All right. The next one that is a real bugbear of mine is the lease agreement. The lease agreement. Oftentimes these buyer's agents will say, yeah, but you know, the leases are so much easier to work with. You don't have to mess with QCAT or VCAT or whatever they have in other states. It's a pure commercial agreement, and whatever's on the lease, the tenant has to pay. But let's be real, guys. A mom and dad business owner that leases a property, let's say less than $2, $3, $4 million, if they're not able to pay the lease as a landlord, and trust me, I've been there, what recourse do you have? Okay, you can say, you know, let's make up that tenant, that lease or that rental payment for last month, next month. You could get them on a payment plan. But if they still aren't coming to the table, what are you going to do? Are you going to take them to court? Okay, let's say that you bought a $1 or $2 million property and the annual rent is $50,000 to $75,000, $50,000 to $80,000. And let's say they're a half a year behind. Let's say they're behind $20,000 to $30,000. You know, that really cuts you, right? Are you going to take them to court for that? Because that's what the commercial buyer's agents will say. But realistically, to go through the court process, even to get a court date, takes more than 6 months. And then to fight it, you know, using a lawyer or a solicitor, every time a solicitor sends a letter, you know, like a cease and desist or a breach letter out to the tenant, that costs you almost $1,000. So to fight to claw back your $20,000 to $30,000 of losses because of missed rent is going to cost you $10,000 to $20,000. And even then, that's going to take 6 months, 12 months, 18 months. All the while, they're not paying rent. And they know it. They're not stupid. So any commercial property, in my mind, I might be wrong. You know, please tell me if I'm wrong. But I've been involved in hundreds of transactions because although I don't educate people on commercial, my clients also sometimes have commercial and they bring these stories to me. And they often pivot back from commercial to residential for all these reasons. You know, the reality is that if you're buying a sub $2, $3, $4 million commercial property, you're dealing with a mom and dad investor. You're dealing with their emotions. You're dealing with their business. It's not just, oh yeah, I've got a 5% yield, 6% yield for the next 5 years. The paper, that lease is not worth the paper it's written on. What is actually valuable is the true economics of the business they operate, and that's subject and at whim to the economy. Right now in Australia, we're experiencing almost record high administrations, liquidations, business failures. We're experiencing interest rates that were higher than before. Businesses are struggling to get loans from banks to expand, to maintain their current operations. Inflation has gone up, so the cost of goods sold has really gone up. A lot of businesses are going out of business because their profit margins have shrunk so much. Labor costs have gone up so much. A lot of these small businesses, unless they're a national franchise, and normally for that, you're paying more than $5 million for a commercial property. If they are a mom and dad business, you know, local business, chances are a 5-year lease, they're not going to make the 5 years, or at least not without a lot of turbulence. So a lot of these things, I'm not trying to be negative, they're not apparent because of the slick brochure, the YouTube videos, the podcasts that the commercial buyers agents share with you, but this is the reality. Let me know what you think. Hit the subscribe button. Thank you very much, guys. My name's PK. Catch you later.